Welcome back again. This is the Captain Gala FX. Now, this is our first video we are going to do this year. It is the year 2026, February, and I told you that this year I'm going to give you videos and classes back to back. And basically, I told you that what we are going to learn this year, I always advocate that pure price action is the best approach to forex trading, which means this year we are going to learn about pure price action. Pure price action. Now, even if you check on the big institutions, mostly they use pure price action as their trading approach to the market, which means pure price action is very, very good because it is also called naked trading. Naked trading basically means you are trading what you can see. That is the best thing with the pure price action trading. You can be able to identify patterns in the market, chart patterns, candlestick theories, and everything. And there are things which you can also relate to in the social life, economic life, and everything. So pure price action trading is the best, and it is the best approach to forex trading. This is something you can even do if even if you are somebody who has not gone too far or has not attained higher levels of education. So today I promised you a video on market structure, and we are going to go one by one. Now today we are going to start with a topic called market structure, and I'm just going to introduce it. Market structure. Now, I want you to pay attention because I will be doing these videos on YouTube. This is the first episode we are going to do, and these videos on YouTube we are going to do them sequentially, which means if you are going to follow all our videos, it is going to be very, very evident that you're going to learn a lot without anything. You can learn everything from these videos we are going to produce. So stay tuned and always make sure you subscribe to this YouTube channel, and again share and like. Now, what is market structure? Market structure basically refers to the repeating patterns and formations created by price movement. That is why we call it forex. Now, if you see these candles being printed, they are just a repeated pattern. That is why it helps us to predict the future price movement. Without this candlestick being printed on the charts, we could be only be trading fundamentals. And you know that forex has been evolving. A long time ago, the people were only trading fundamentals, which means you are just looking at maybe what is happening in USA, that is the United States of America, what is the economy, any news about that particular economy. But nowadays, you have seen that technical analysis has taken over everything. Nowadays technical analysis, because this candlestick being printed here, basically they represent the data within a specific economy, which means the market will always react, or will always react to the data which is available within that given economy. That is why even during news, I always trade the market technically. The market will always follow technicals. Now, today I told you that we are going to learn what about market structure. Market structure is just the repeating patterns, which means we are only going to deal with mostly the patterns the market is forming, like the M pattern. Sometimes the market forms what we call a W pattern. Those are the market structures. Inverse head and shoulder. Uh, uh, Sometimes the market forms what we call cup and handle. These are things which always give you even the confidence enough to trade that particular market. Now, if you're somebody who is trading using pure price action, you will always be very, very confident about this particular market. You will be trading, sometimes you'll be getting what we call head and shoulder, cup and handle, something like that. The patterns will be very, very evident, and we will be talking about the patterns that give us the reversal. When you are looking at the reversal in the market, which pattern do you always check, things like that, because the market during the reversal there's something that the market does. Those are things that we'll be learning from time to time. That is the time that we'll be learning from time to time. Now, sequentially, the market will always, if you are talking about the market structure, sequentially, that the market will always be forming higher highs and higher low, the higher highs points and higher lows points. That is why the market will always be moving on a pattern. Now, which means you'll always find that the market will be moving like this. The market will always be moving on a pattern, which means it will be forming what we call the higher highs and higher lows, which means the higher highs, that is the higher highs. This is higher high. Another one is here, higher high. Just make sure that you are attentive. Now, this market will always form what we call higher high and higher lows. Higher lows. Now, the market will always give you something like this. This one will always call what we call uptrend in the market. Now, when the market is uptrending, the market will always give us higher highs and higher lows. Higher highs and higher lows. For those people who are always asking me on the live that where do we do layering, I will come and explain that, what is layering and everything. Layering is always done when the market creates what we call a break of structure and retraces to the higher lows, when you are having uptrend market. Now, the market will always uptrend by forming higher highs and higher lows. Now, sometimes the market will always start moving on sideways, whereby when the market moves on sideways, the market will always be creating higher highs and lower lows, which means there will not be there will not be break of structure, but rather the market will be creating higher highs and lows. And after that, you'll find that the market will get a reversal and gives us a downtrend, whereby now we'll be having lower lows and lower high, lower lows and lower highs. This is something we always call a downtrend in the market. Now, if you have known that the market will always move like this, first, what you need to know or what you need to do is check on the trend of the market. Check on the trend of the market. That trend of the market is very, very important, because it gives you a very, very good idea on basically what you need to do. Now, this is an uptrending market. When the market is uptrending, the market will always form what we call higher highs and higher lows. When it is moving on sideways, or whereby most people always tell you that this is called the consolidation phase, and that consolidation phase is always, the market always give us what we call higher highs and lower lows. Now, after that, we'll always find that the market moves on a downtrend, and when the market is moving on a downtrend, we'll always get what we call when the market is moving on a downtrend, we'll get what we call lower highs, lower highs, lower highs, and the lower highs. Now, that is something called the market structure. Now, as a forex trader and a forex beginner, this movement of the market, you have to master it first, because that is what is going to help you on this particular theory. Now, after knowing this, we have what we call in the market structure. When the market always forms higher highs, we get what we call a break of structure. Break of structure, that is what we call the BOS, break of structure. When the market breaks the structure, we always get the retest. For you to take an entry on this particular market, you cannot take an entry up here, because the market will always pull down to form higher lows, whereby a lot of let me say some imbalances were left here. The market will always come to grab those imbalances, or some liquidities to be swept around that particular zone. Now, mostly if you want to trend this uptrend market, when the market gives you a break of structure, whereby you will always find that some people are only trading break of structures and retest. Now, whenever the market retests on this particular market, you will find that entries are given at this particular zone. When the market breaks another structure here, you will always find that the market gives you a retest of that particular zone. Now, when you are somebody is trading on layering, and some people have been asking me on the in TikTok, when I'm always on TikTok live, if you want to do layering is adding more position when the market always gives you a new high, which means when the market creates a new high here and pulls back, this is your entry point, which means, let me say you took a trade here, the market gives you a break of structure, retest, take other entries again. When the market breaks this high again, retest on the same, take another entry. Now, these entry zones are what we call layering zones. Layering zones always help you to maximize the profit. It helps you, let me say you did not reach your target profit. The market will always move on a zigzag, creating new highs or new lows. Now, when you're getting these new highs, always enter at the retracement level. But when you see the market comes back and break the last low, which means higher low, when the market comes here and break this last low, don't enter this market but rather exit, because we are going to get what we call the change of a character. When the market changes character, it gives us what we call a reversal on that particular market. That is something you have to learn and you have to know. Now, this is called the exit zone. Now, even if you are in this particular market and the market hasn't hit your TP, this should be your exit zone, because immediately the last higher low was swept, that market is now is now not on a higher time frame, but rather the market has reversed and has given us a change of a character. And once a change of a character is seen on a particular market, basically what we are having is basically a reversal on that particular market. Now, this is the exit zone. When you are placing a trade, always know the exit zone, entry point, exit zone, the stop loss, and everything. Because if you don't know the exit zone, the market might not hit your TP. But if you see the market is reversing and has changed the character, basically that is the exit zone, and you need to take that with a serious vigor and serious and everything. Now, when you see the market has broken that, changed that character, kindly exit on that particular market. The same as this. When you are seeing the market creating what we call lower low and lower highs on this particular market, and immediately when you are in this market and the market has not hit your TP, the market comes and sweep the last high, the last lower high, and retest it, which means this market is no longer on a downtrend, but now we are going up. That is the exit zone. Whether the market has hit your TP or not, kindly exit at that market and take your profit at that particular zone. That is the problem that very many traders across the world are having. You are holding the market, which you know very well that this market is going to hit my stop loss, because the market has changed a character, but you don't want to come into terms with that, because you want just to hold that market to the TP. Once you see the break of structure and the change of a character in a particular market, that is the exit zone, that is the reversal zone, and you should take your profit from there. Now, the next lesson and the next episode we are going to break down on the change of a character and the break of structure. Change of a character and the breaks of structure, how you can trade it and how do you do it, how do you mark it, and everything on the market. That is something we are going to have, and practically you're going to see them in this particular lessons. Take these lessons seriously. This is the first episode. I'm going to take you even to the 100th episode so that you can learn something from there. This is the Captain Ngala FX. Use the link below on the description to join our free Telegram community, and also use the link below to create an account with the best broker in town. You can DM us for account management, the FIAT Signal community, using the number which is going to be pinned on the comment section. We can do copy trading for you with the exam as the broker. We can do account management, VIP Signal community, and everything. Thank you guys. This is the Captain Ngala FX. Bye bye, and see you in the next episode, which is going to be released on Friday, which is tomorrow. So stay tuned, because every day we are going to get a lesson, and every day is a learning day. This is the Captain Ngala FX. Bye bye, and see you next time. Adios.